And we are live. Hello and welcome to episode number 12 of Daily Market Mastery with me, Christian Rauchenwald, where I, as a popular investor on eToro, use Elliott Wave Theory, that magic book here that you can see blurry here, but you can also find linked in the description down below, to try or determine the forecasts or future movements of stocks, indices, and other assets for my portfolio, and basically sharing with you how I make my decisions to manage my portfolio. Now, that said, as always, we can see, or you can see the disclaimer here. Everything that I share in this live stream / video, if you watch it later, is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Now, as mentioned, I'm using Elliott Wave Theory for most of my trading decisions simply because for me personally, it worked out very, very well in the past. You can either, or if you're interested and you have no idea what it is, you should check out episode number 1 of Daily Market Mastery because it's covering some of the basics. But more than that, you should actually use the link in the description below, and you can then read the book for free online on elliottwaveinternational.com, or order a physical copy once you understand or once you decide to actually actively use it, because the physical book is just better to reference than the digital version. And on top of that, you can also, if I push that magic button, use the link to download the one-page cheat sheet that I'm using fairly often to basically not having to look up in the book how certain wave patterns break down into other wave patterns and so on. Now, that said, over the last couple of episodes, we're now set as episode number 12, we've actually looked at a bunch of things ranging from the SPX, NASDAQ, what else did we look at? Peloton, Black Knight Inc., Shopify, AMD, GameStop, Ford, and so on. And today we're going to take a look at Domo Inc. I honestly don't recall why I put it on my list, but I saw a post about it. And it was about, I'm going to check my photos. Usually I take screenshots of stuff like that real quick. Domo Inc., blah, blah, blah. It was about insider purchases. So Quiver Quantitative shared that cloud-based intelligence firm Domo Inc. CEO bought nearly 420,000 shares since late March, totaling over $6 million, with an additional estimated 1 million purchased by a director in early March. These trades mark the first insider buys at Domo since 2018. And as the famous quote goes, while there are multiple reasons for, or different reasons for insiders to sell, there's usually only one reason for insiders to buy. They believe the value will go up. And that's why today we're going to look at Domo. Before we do that, however, I'm going to share my screen and we're going to quickly recap where we're at. Unfortunately, I noticed I just opened up Motive Wave. In case you're wondering, real quick summary in terms of Elliott Wave tools. You can find everything you need in the video description down below, but quick summary, you can use TradingView for free, although you have to know what you're doing because there are no guides in terms of if you're doing it right or not. You can sign up for Wave Basis, and even after their free trial, you don't have to pay, but you will have limited features available. However, those features come with something very neat, and that is basically forecasting. So if I put that here, that here, that here, and the rest I'm just going to put random since we are looking in the future, then we can see that we basically, depending on where our wave patterns go, we get a forecast as to where Wave Basis thinks the price should move next. Now, as we can see, it's not always accurate, but if you check out previous episodes where we also here and there used Wave Basis as an alternative to consult, you sometimes, or not only sometimes, but in a reasonable number of cases, end up with a reasonable accurate estimate. So here it probably will not be the case. So would have to switch on a lower time frame. Anyway, so, and other than Wave Basis, in my opinion, best tool would then be delete Wave, would then be Motive Wave, which looks a little bit outdated, but just has so many features to offer. Now, sadly, with the last thing we labeled was Peloton, where we have basically one labeling or one charting that would suggest that we're moving downwards, where, however, based on Kennedy channeling technique, we have the chance to actually go up here before we continue our journey downwards. And yeah, in that case, our profit target would still be roughly 100%, with our downside being, what did we say, 50%. So it's like risk reward ratio is okay. And the second labeling unfortunately got deleted or not saved. I don't know why, but basically the upwards labeling assumed we just start from here and that we are right now looking at this. And for that, if I recall it correctly, yeah, so I mean, you can check out the last episode for that. Need a Fibonacci retracement here, so we're gonna throw that here, and based on that Fibonacci retracement, we already back there you go. We already had the, and get rid of the volume. Usually don't need it. Although you can use the volume also as an indicator that helps you confirm certain waves, yeah. But we hit the 61.8 retracement, which would be a common point of like, not always, not a rule, it's not always gonna hit that point and so on, yeah, but like reasonably enough an indicator that this might be 012, and then what we're actually looking at might be an upward movement, yeah. That basically looks like this. That would be our base channel, and we're waiting for a breakout from that base channel, in which case, and for that we would then need a Fibonacci extension, which means we just get rid of that one and add an extension instead. And there we go, because it has both in there, so our retracement and our extension. Just it's now vice versa. So what used to be the 38.2 when we are looking at the retracement is the 61.8 and vice versa, but it would give us a profit target of at least the 32.77, and potentially, so it could then, if we add the median to the base channel, so it could then look something like, yeah, like this as a wave pattern. Again, time is a different thing here, so yeah, but so we would get a profit target that might be in the 32, although we might take the profit already at 22. So because again, we don't know if this here turns out to be the right labeling or this here. Either way, if it's this, we definitely stand to make a profit, and our stop loss is reasonably low, so we don't have to worry about it. And if this here turns out to be true, then we still have a reasonable chance to make a profit along the way. We might even sell a little bit before the $20 mark. So depending on where we go, if we go up there, rather to secure a profit than watch it then go poof. Yeah. And yeah, we'll see how it turns out. Now for the rest, if we take a look at the SPX, what happened here? Yeah, our labeling is still valid. Again, we're still waiting for what to happen here, and as long as we're below the 4,195.44 mark, that's still okay, although it might turn out to be not okay and we might have to adjust that. Perfectly fine. Anywhere in this range would still be fine. Also, if we add a Fibonacci retracement here, let's just check. I mean, here we might have a little bit of a different okay, should have done that differently. Nope, works fine. Okay. We can see as well here, we haven't hit the 61.8 yet, but we are in the 50% area. So this would, again, that whole area, 38.2, 50, 61.8 would be the area where we usually, again, not always, not guaranteed, not exactly on the line and so on, it could go further and so on, but where we usually would expect now wave 2 to finish and turn around, yeah. Yeah, we're not gonna bother to try to work out what kind of corrective pattern the second wave is. It's likely a zigzag or a flat, or it should be, it's not a flat in this case because our wave B would need to be higher, so it's not a perfect zigzag either. So we're not going to bother to try to confirm that. We're just going to wait and see what happens. I'm confident that we'll see the downturn, although that's just my opinion, yeah. Anyway, so here we're in a waiting position with the NDX or the NASDAQ. We are also in a waiting position with Shopify, where we doubled our buy position based on this assumption. Yeah, like could zoom in here, but not really necessary, I guess, because at the end of the day, we are really making a long-term play here. We can see that our wave 1, how do I, again, cursor data, LLD. So our wave 1 here is in November 21. So we're talking about more than a year that happened for this, multiple years that it took to get here, which means we're talking about multiple years to get up there, but we still have a couple 100% then profit target if it turns out correct. Black Knight Inc., if I recall correctly, was very similar. So we're also looking at a multi-year outlook. And that's why, as long as we don't go below 52, we should be good. If we go below 52, that count was invalid. And well, then, yeah, you can't always win. Ford, we are not fairly certain yet. We basically are looking how this plays out. If that turns out, great. If not, our loss is also relatively small. GameStop, as mentioned, separate episode about it. Elliott Wave Theory doesn't apply that much there anymore, in my opinion, but we're also expecting, like an upwards movement. And Peloton, as said, we have the two scenarios. Now, that brings us to, as said, Domo. Domo Inc., US dollars, NASDAQ, there we go. Inherit settings, okay. And with that, we have our new chart open. I'm not sure if we will keep the pattern of opening one chart per day, to be honest. So I'm also going to check the settings real quick. So configure workspaces. Nope, not workspaces. Configure preferences. Chart. Is there somewhere the volume thingy? Indicators. Use, show, open, close, show orders. Chart buttons, quick, symbol, bar size, show info, show eraser, doc, study, resolve trend lines, group studies, show properties, hide primary name, show extended data, let's see what that does. Nothing, okay. Trade panel, trades, nope. Similog scale is what we usually use, so we can turn that on. Let's see, templates, confirm, labels, time axis, indicators, chart settings. There is no... Okay, there is no volume thingy here. General. Okay, so we can find it, so we'll have to keep manually removing it. Now, first thing that we always do is set, because we're my data source here is Interactive Broker, we confirm the data source. Now, we have here basically the start in June 2018, and if we circle back here, we have June 2018, and if we check on TradingView, we have June 2018, so we definitely have the full data. We have to consider the price movement, so are we accept all? And where is the adjust data for dividends? Interesting, okay. But what we're actually looking for is the logarithmic button. There should be one that I just cannot see right now. I'm using TradingView not enough. Anyway, we have similar data here, although we are now... there we go, logarithmic. So here we actually already have it in logarithmic. Okay, that's fine. Now, based on that, we again have two options. So option number one is that we say, okay, we label from here. And if we let that auto label, it would do it like 1, 2, which would mean we're at the beginning of a third wave move and are pretty much going to, well, let's start with the Fibonacci. I'm going to just put an extension here directly. So we have our retracement and extension in one thing. And there we go. Where obviously in this case, we didn't turn around at 38.2. We had a really, really sharp corrective pattern down here and so on. So so in terms of that, we don't really have a confirmation here. And let's get rid of that. And then we would draw our base channel, base channel. Using the so-called Kennedy channeling technique. There we go. So, which means we would actually expect the breakout from the channel. Obviously, wouldn't happen tomorrow because we're again looking at multiple years. But over the next couple of years, we would actually look at a more than 1,000% return here if that turns out to be true. Where our risk, however, would be 1135. So, like, what do we have here? Like 20% risk with 1,000% upside. That sounds like a good deal to me if it turns out to be the correct labeling. Now, that actually would be the labeling that we would apply from labeling from the low point here. Theoretically, or in the same case, we can also just switch to a lower timeline here. So 2 days, and then zoom out a little bit. And what was it? F5, yep, to snap the candles. So the feature that I've been criticizing a lot in Motive Wave that finally got added. And we could then try to see, okay, how does it look here? So if we look on a smaller scale, which would then be trying to work out wave 3, which obviously consists, if we jump to the desk cam and look here, an impulse wave, the third wave will always subdivide in another impulse wave, always, no exceptions here. So obviously then that impulse wave will then subdivide in another 1, 2, 3, 4, 5 impulse and so on. But yeah, here we are. If we check a retracement here, I mean, we have like way more than what we would expect. So as we can see, we actually have an almost 100% retracement. It's still valid. It would only be invalid if we have more than 100%. But basically, what we assume or would assume is that we're looking at something like this right now. And basically, this gives us a smaller base channel where we would, on a shorter time frame, wait for a breakout or hope, or not hope, but expect a breakout from this channel to indicate that we're in this third wave movement. We can also very likely label an ABC in here, probably would more go like this, yeah, although, so for the look of it, but yeah, like we would have to look closer and see if we can confirm that and so on. But yeah, so basically that's where we are at right now here, where we basically would wait for this to happen. Now, considering the overall look of the whole thing, what other way would there be to label it? So if we actually, let's say, a new analysis, call it alternate 1, and go here, and then not 15 minutes, but yeah, I mean, here we actually have 15 minutes is actually interesting here in this case, or not. Get rid of the volume data. Okay, 15 minutes is too close right now, but yeah, let's circle back again to the monthly. Okay, here we go. So considering what we have here, we definitely should start labeling down here. And sorry, I forgot to switch back. So as said, yeah, sorry, I forgot to switch back, my bad. But yeah, what I did was basically we have the 0, 1, 2 that we labeled, and now we looked for a 0, 1, 2 that we could have in there, where then basically we have a smaller base channel where we would wait for a breakout, which means like even on that smaller scale, we would have like $6 upside, almost $5.80 or 90 to just reach that 0.1, not the actual profit target. The profit target would probably be, if we take Fibonacci extension, throw it here, then our first profit target would probably be at 26. So move that somewhere else. So at 26.32 would be our first profit target. So almost 100% upside, where our stop loss in this case would be 11.35. So again, 20% downside. And that's a trade I'm willing to make, especially considering that, again, in early March or in March, insiders bought a lot. And again, there's usually only one reason why people or why insiders buy. I mean, sometimes they make a mistake, understandably, but we're going to throw around 1% of my portfolio in that position. We're going to set our stop loss at 11.35, because if we go lower than that, then our labeling is wrong. And now we could make this a short-term trade and have our take profit basically at 26.32, which would mean we have a downside of 20.46% with an upside of 84.44% of the 1 something percent that I would invest in Domo. Yeah. Or we could, if we again, yeah, like we don't need the alternate labeling. Would you like to save it? No. Or if we consider and zoom out, because then actually what we're looking at would be the long-term investment, which would look like this, in which case our profit target would actually be 477.82. Now we are light years away from that, and I cannot even set it higher than 156.97 at eToro, which would equal 1,000% return. Yeah. We might have another one at 138.2%. Yeah, that might be another one, which still would be more than what I can even set in eToro. But again, here we would look then at a multi-year trade. And maybe I'm going to open 2 separate positions, and we're going to open one for like 0.6% of the portfolio and go for the 1,000% return. So, and let's do this. And yeah, did it come on open? Okay. And then we're going to open another one for 0.6. And again, our stop loss would be 11.35. So again, 20.46%. And our take profit, just going to redo that, push it back, zoom in, zoom in. And our take profit would be, let's take it on the safe side, would be 23.28. So which means then 20% downside, 62% upside. So the risk reward ratio definitely checks out. And if we now circle here and portfolio, so we see it here. Yeah, so now we have the Domo positions here with 1.31% total. We can see our different profit targets, although that one would actually be much higher. So this would be a long-term investment that we may or may not increase over time. And this here would be our short-term, shorter term. I mean, we're still talking about, we're still talking about when did we start here? That was in January. Yeah, we're still talking about a couple months here to get there potentially. And so, and the short-term position, basically, that would be this one. Yeah, okay. And this one, okay, yeah. So I think that's what we're gonna do with Domo. Now we could look further, we could look for other sources and so on. And I know that I didn't bother to confirm the lower levels of that pattern, but considering from here, the only valid labeling would be this. And we can actually, if we look, not like this, and go here and do this, then we can see that we can also confirm this as a valid, in this case, even an impulse, because the price, now here we have 39.28, so it would actually be a leading diagonal in this case, if it's labeled like this. Although it's more likely that probably wave 1 and 2 are somewhere earlier than with a strong wave 3, or that one of the waves here is extended. Yeah, so either way, confident or not confident, like I'm fine with the decision. So confident is always hard. Yeah, so not that you suddenly throw your savings into Domo and then scream at me when the trade busts. But overall, I feel like, that's not the worst decision here. Now, usually we would actually have a 30-minute stream, which would mean we still have 8 minutes left. But for today's episode, I honestly think that's pretty much it. So we had huge insider buys from Domo, which usually indicate that there is something coming that makes the insiders confident in throwing millions into the stock. And on top of that, if we look at Elliott Wave Theory, we already have a labeling that while we didn't bother to confirm it on lower degrees, so look if this checks out, look if that checks out, we have something where we have like where our risk reward ratio is reasonably okay, and therefore we'll just go with it, because again, we have a 20% downside on 1.3% of the portfolio, which means worst case we lose 0.26% of the portfolio's value if we hit our stop loss here, whereas our upside, if that labeling turns out to be true, is just so ridiculously high, especially the long-term investment, that it just doesn't make sense to miss out on that. It might turn out to be wrong, we might even be early or something like that. And like, for example, with Peloton right now, we just opened the position recently, and our position is right now at -6% of the 1.3% that we invested. We have 1.3% invested there, but it's like too early to tell, because again, we're looking for something that should play out like here-ish. So we're talking months to come before we will see the actual result of what we did here, unless obviously if we go down faster, then we might have our stop loss hit sooner. Anyway, so that's pretty much it for today. Tomorrow we're going to look at Apple. Tomorrow is first day, so it's the last stream for the week. Then we're going to look at Apple, and then we're going to schedule the streams for next week, where I'm not yet sure what we will look at. We probably will pick something again from the economics calendar at eToro. Don't forget, if you don't want to bother with all of this and you basically just want to lean back and have somebody else take care of this, you can always use the link in the description below and just sharing my screen again and just copy my portfolio on eToro, where, as you can see, while obviously my 2023 so far doesn't look as impressive, But you can see that since inception of the portfolio 1, 2, 3 years ago, I've outperformed the market steadily and with higher profits that I've shown in pretty much every year so far. Also come here and there higher losing months like we had here or here or here. But on the other hand, it also means that over time, while I've been early in some cases and so on, my really profitable months also outperform my losing months by a lot, like here, like here, like here, like here, and so on. No guarantees. Obviously, it could also be that whatever strategy I've been using in the past couple of years suddenly doesn't work at all anymore. But again, like if you don't want to deal with trading yourself, you can always either copy me or you can also use the same link down below and create your eToro account and then browse through all the other popular investors that there are that you can copy and to basically just let somebody else do the work for you and hopefully profit long term. Anyways, as said, that's it for today. Thank you guys for tuning in and or watching this later as a recording. I hope you all have a great day ahead and hopefully see you tomorrow with another episode of Daily Market Mastery.